Fast food is disappearing, and it's being ignored. In 2025, major chains from McDonald's to Red Lobster are shutting down across America. These are the names going under and the reasons behind it. Even McDonald's isn't safe anymore. Prices went up by 20% in the last 5 years, and people with lower incomes stopped buying as much. Things started going downhill. In 2025, McDonald's brought out a new McValue menu with cheaper options to try and get those customers back. Starbucks is not doing so well either. In the first few months of 2025, its sales in the US fell by 3%. One of its oldest stores in New York, open for over 30 years, had to close because the rent was too high. At the same time, coffee prices continue to rise, and people are now questioning whether a cup of coffee really deserves the price. KFC is struggling to survive in the fast food chicken war. Prices have risen, competitors like Popeyes and Chick-fil-A have gained strength, and customers are no longer as loyal as they once were. As a result, KFC's US sales are down 7% this year. This kind of decline doesn't happen overnight. It's part of a larger trend where people are turning to other places that offer better flavor, lower prices, or something different from the usual. Now, KFC's parent company, Yum Brands, is hitting the reset button, planning a major overhaul to revitalize the brand and stay relevant in a crowded market. Red Lobster filed for bankruptcy in 2024, and things haven't gotten any easier since. In 2025, the chain is closing 129 restaurants and working to restructure its debt in hopes of staying alive. But the challenges are stacking up. Rising seafood prices, fewer diners, and stiff competition from cheaper, faster alternatives are all taking a toll. What used to be a go-to spot for casual seafood now struggles to fill tables. Unless something major changes, the future of Red Lobster is hanging by a thread. Jack in the Box and Del Taco are shutting down over 200 locations in 2025. Rising lease costs and a steady drop in customer traffic have made it too difficult to keep many stores running, so both chains are cutting back to stay in business. Many of these closures are happening in areas where operating costs are highest and sales have slowed the most. It's a tough move, but one they see as necessary to avoid bigger losses down the line. Domino's is leaving Japan, closing 172 stores in early 2025. The company says rising delivery costs and weak demand have made it too difficult to continue operating. Sales never took off the way they hoped, and at this point, staying in the market just doesn't make sense anymore. TGI Fridays filed for bankruptcy at the end of 2024. Now, in 2025, it's closing 36 restaurants across the US as fewer people choose to dine in, and real estate costs keep rising. The chain is cutting back to reduce losses and stay afloat in a changing market. Boston Market has filed for bankruptcy 3 times, and the trouble isn't over. In 2025, several locations are shutting down because of unpaid wages, lease disputes, and ongoing financial losses. The chain is struggling to keep up and running out of options. Chicken Sours is out of business. The popular London chicken spot shut down all its locations in 2025, blaming rising costs and changing customer habits. After years of buzz, it couldn't keep up with the pressure. In Texas alone, 25 Dairy Queen stores have shut down. Equipment was sold off at auction, and landlords are now suing for unpaid rent. The closures point to deeper financial issues within the chain's local operations. Twin Peaks pulled out of California in 2025. The last spot in Sacramento closed after profits kept falling and staffing costs got too high. With no sign of improvement, the company decided to walk away. Max Hamburgers ran into trouble in Sweden after a hygiene scandal. Viral photos sparked public outrage, leading to several closures and pushing the company to start a full rebrand to repair its image. Tex-Mex chain On the Border filed for bankruptcy in early 2025 and shut down more than 12 locations. Climbing food prices and thin profit margins made it impossible to keep going. Despite efforts to cut costs and boost sales, the numbers never added up, and the closures were the only option left to limit further losses. Papa John's reported a 3% drop in North American sales in the first quarter of 2025. With delivery fees climbing and families cutting back on pizza nights, the company is now closing stores and laying off staff. It's a clear sign that even big names aren't immune to shifting consumer habits. From burgers to burritos, America's fast food chains are shrinking. Which one will be next? Don't forget to like, share, and subscribe. Here on Economy Pulse, we follow where the money flows and the people it carries with it.